Hi there, welcome to Kneppy Invest and welcome to Thursday, the 23rd of May 2024. We have about 30 minutes of normal trading left on the ASX plus a 10-minute closing auction. And I'll talk about the agenda for today's video right now. The first thing we're going to do is have a look at what happened with Nvidia, because I think what happened with Nvidia is very important to what has driven our markets. Also, what has happened to copper and gold overnight has been very important for our market as well. I'll talk about Nvidia, talk about the ASX today, look at the best performing, worst performing companies, and I'd say most of the worst performing companies are gold companies because gold did fall. Also, copper companies, copper fell as well. And then we'll have a look at the top 5 announcements of the day, and then maybe a couple of honorable mentions. I really want to finish this video in 30 minutes. So let's get stuck into it. But before we have and talk about Nvidia, I probably just should mention I went to have my skin checked today or this morning because I had 2 lesions on my arm. There we are, lesions. Well, that's not the lesions, that's the bandages for the lesions. And I was a little bit concerned because they weren't healing and they were skin cancer, small skin cancers on my arm. So I think it's very important to make sure you check your skin once a year. Or if you do have any concerns about any sort of lesion or scar, whatever you want to call it, whatever you want to call it, is not healing, go see the doctor. And fortunately, just up the road from me, there is a skin check clinic. So that's my day for today. I did have skin cancer, but no more. That's what he said. He said, I just did some stuff and you no longer have skin cancer. So make sure you check your skin because we do have, I'll live in a country that has quite a bit of skin cancer, probably the highest rates in the world, I would assume. Okay, so that's the personal stuff done and dusted. Let's have a look at what happened with Nvidia overnight. They reported after market had closed over there. So they reported about 6 to 6:30 a.m. local time. In fact, I was taking the dogs for a walk, and as I was walking, I checked my phone to see the aftermarket trading with Nvidia. And when I saw that the aftermarket price was up about 5 or 6%, I just knew the results were pretty good. I was actually fearing that a little bit because I am a shareholder of Nvidia. And I think if the results aren't to expectations, there is a possibility the share price, there was a possibility the share price of Nvidia could have dropped a lot. But the results beat expectations and the management of the company are still fairly bullish about the next few quarters. And based off their results in this particular quarter, I would actually say and argue that Nvidia is attractively valued. It's not overvalued, it's attractively valued. I'll talk about that in a second. In fact, let's talk about that right now. So this is from App Economy Insights. This is their flow chart going from revenue all the way through to profit. So $26 billion of revenue, the majority of that is through data centers. In fact, that's one of the reasons why I took a position in Nvidia is because of data centers. And we're going to see a massive explosion in data centers over the next 5 to 10 years, massive explosion. And Nvidia is going to benefit from that. And it's one of the reasons why I've piled into a few data centers and companies like that who help building data centers and maintaining data centers in Australia. But $26 billion of revenue, and they break it down really nicely from revenue, gross profit, operating profit, and then net profit. And a net profit of $15 billion with a really nice margin of 57%. Now, that's in one quarter, by the way, one quarter. So if you analyze that, and I wouldn't do this because this was the first quarter, by the way, financial year 25. But if you analyze that, that's $60 billion of profit in 1 year. Now, that's suggesting that assumption is the profit of this company won't increase from here. It's going to remain flat, which is probably a silly assumption because this company is right now significantly increasing their profit. Now, eventually, I think that profit growth will slow down. Maybe it will flatten out for a few quarters, or maybe it will dip back for a few quarters. But let's just make an assumption that they have $15 billion of profit the next 3 quarters, $60 billion of profit for the full financial year. Company currently has a markup of $2.4 trillion, which means right now, this company is trading on a P ratio, based off my assumptions, of 40. So don't listen to those who say this company has a P ratio of above 100. It's right now based off 40, just on this quarter's numbers. Now, if you look at trailing P ratio, you will get a higher number because the last 3 quarters of profit were significantly lower than $15 billion. But if you look at forward P ratios, I'd say the P ratio of Nvidia might be 30 or even lower than that. So I probably would personally ignore anyone who says that Nvidia is overvalued. And the reason I say I'm going to ignore those is because I did do a fair bit of research on Nvidia, and one of the parts of my research is looking at bear cases. I even did that this morning. I looked at some more bear cases, and most of the bear cases use a DCF to justify why they think Nvidia is overvalued. And a lot of the assumptions they use is based off really slow profit growth, which is quite silly for Nvidia right now. In fact, one of them assumed this company would have no growth over the next 20 years, and they came to the conclusion that Nvidia was overvalued by 50%. Now, that was found on Reddit Value Investors, and it's not surprising that value investors have a really hard time with Nvidia right now, because you can't do DCFs with this company, because honestly, how are we going to project this company's cash flows or their profit over the next 5 to 10 years? It could be significantly higher, even if we are being conservative. Anyway, that's Nvidia, another good quarter from the company. And for full disclosure purposes, I am a shareholder of Nvidia. I bought about 3 months ago. So this is, no, that's not the chart. So this is their chart. That's where I bought. I bought in the middle of February, just before their last quarter results, which was a sort of a risky proposition. And just after I bought, the share price dipped the next 2 days. I did time it, so I bought before their results, because I had a feeling the results were going to be absolutely stellar. And that was orders. And that was just, won't say fortuitous timing, but that was planned. That was planned. Okay, so let's skip from Nvidia all the way through to what has happened on the ASX today. And the XJO down, all ordinaries down, but you'll notice all tech is up 1.3%. Now I'm just going to refresh this. All tech is up 1.02%, and you'll notice that resources is down at 2%. So if we have a look at the sectors and the indices, there is a bit of a bifurcatedness to this, with IT up 2.45%, while materials is down 2.08%. And it's not surprising that materials is down, because gold and copper had a rough night. In fact, I think copper was down about 5%. And not surprising, IT is up because Nvidia. Healthcare also has had a good day, up 1.5%. Utilities up 1.2%. And discretionary down 1.13%. So a really intriguing day on the market, with 5 sectors down and 6 sectors up. So even though more sectors up than down, overall the market is down. And if we have a look at the indices, all tech is the only index up 1.03%, and gold down 3.32%. Not surprising, because again, gold had a rough night. Now, if you have a quick look at the ASX 20, I'd say there's a good chance half the companies down. No, 12 down, 8 up. Best performing companies: Transurban, CSL, QB Insurance, Telstra, and Goodman Group. Worst performing companies won't be a shock: BHP, Aristocrat, Rio Tinto, NAB, and Wesfarmers. I actually thought maybe there'll be a few more mining companies there, but not surprising to see BHP on the worst performing companies in the ASX 20. So let's have a look at the best performing companies and the worst performing companies. And I'm going to see if there's any companies that are a bit of a surprise here. In fact, most of the companies are quite small. Not seeing any big companies by percentage change. Not surprising that AFT Pharmaceuticals is in this list, up 14.2%. That did make it onto my top 5 announcements of the day. And by market cap, with Xero. Not surprising Xero is on this list as well, because that made it into my list as well. I have not numbered the top 5 announcements, which is something I should have done before I started this video. I just realized that right now. I am going to number this right now, and I'm going to put Xero 1. I'll put Nufarm 2. I'll put AFP 3, the Reject Shop 4, and EROAD 5. There you go. So that's how I do it, by just doing it not randomly. And then the worst performing companies. I'm looking for the Reject Shop. And it's not there. So let's have a look by market cap. Are we going to see Reject Shop here? No, not surprising. We have copper, gold. Latin, I'm pretty sure, is lithium. 29 metals is copper. Then we have Serco. Then we have uranium. Peninsula. Catalysts is copper or gold. So a lot of mining companies within this list, but no, the Reject Shop. I thought the Reject Shop might be down a fair bit, but not quite. Oh, the Reject Shop should be up at the top here somewhere. Anyway, so I'm pretty sure Reject Shop did fall in share price today. And a couple of honourable mentions I will talk about. In fact, let's do that right now. Let's have a look at the honourable mentions. I won't take long. Remember yesterday, Beam Communication was down a fair bit. It's up 20.8% today because it was down a fair bit yesterday. What was it down yesterday? 20%. And it's recovered straight away. So those who sold out 12 cents yesterday are probably kicking themselves right now. Or maybe they don't care. So honourable mentions today. First, we'll have a look at Neuren Pharmaceuticals. Company went to a trading halt. Share price or indicative share price is up, and they will be releasing the phase 2 results of the trial they're doing, which is a clinical trial in Pitt Hopkins. So at this point in time, just based off that indicative price, the market is hopeful that the results will be good. I have no idea. But for those who are holding Neuren Pharmaceuticals, fingers crossed, particularly those who have gone all in. And if we have a look at the chart for the company, nice little rebound about a week ago, but overall the chart probably not. Let's try and decrease the size of my. I mean, chart's okay, but we've seen this sort of pattern before where the share price just goes sideways for a long period of time, then it just increases suddenly, then goes sideways for a long period of time, increases suddenly. So like a stepwise progression in the share price. And another honourable mention, we'll talk about Wisr. Why not? They actually did do an update today, a market update, and based off the share price performance, up 2.7%. So nothing interesting there. I just wanted to see if the share price had maybe bounced up. But let's have a look at the chart for Wisr. And the reason why I want to see if the share price had bounced is because you can see the chart, share price in a well-defined downtrend, but since the end of 2023, share price is now going sideways. It's consolidating. So what I'm waiting for a company like this is just a breakout, preferably on positive financial news. That's why I was looking and put Wisr into my honorable mentions, but it's just not happened today. And the last thing I'll just mention is if you do have a holding in Dropsuite, they are doing a share consolidation. So if you put Dropsuite, the code DSC, you won't see it there. There's one CBOE, but there's a one called DSEDD. That's Dropsuite. Here we go. Share consolidation ASX code. And actually mentioned in this particular announcement, the company's ASX code will be DSEDD on their ASX platform whilst trading is on a deferred settlement basis. They're doing they're in a consolidation or phase, I suppose, 10-for-1 consolidation phase, and the share price of Dropsuite will go from 26 cents to about $2.68. So just divide this by 10. That should be suggesting the share price is 26 cents right now, but post-consolidation it'll be $2.68. And I am actually interested in Dropsuite moving forward. Do they have the chart here? I wonder if they have a chart. Yeah, they do have the chart. And yeah, they've changed the chart. So this is a post-consolidation chart. Yeah, $2.60. Anything under about 240, I would be interested in taking a longer-term position in Dropsuite. So let's turn our attention to the top 5 announcements of the day. Yesterday, I forgot to mention AUB Group and A1M, which is AIC Mines. Both companies did a trading or capital raising. AUB Group has gone out of that capital raising and the share price is up, which is good. So they did an acquisition and a capital raising. So the market has liked it. That's good to see. And I'm just going to see if AIC Mines is out yet. No, they're not. So they're doing a capital raising right now. There it is. And you know when a company will come out of a trading halt when they're doing capital raising, when they complete the placement. That's the important announcement. Here we go. AUB Group successfully completes $200 million placement, and then shares will be traded after that. So they just want to complete the placement with institutions, and AIC Mines has not done that just yet. Okay, so let's have a look at the top 5 announcements of the day, starting with EROAD. Okay, EROAD, this is interesting. EROAD up slightly. It was up as much as about 7% earlier. Now, a lot of illiquidity when it comes to this company, but EROAD achieves positive free cash flow in financial year 24. 124 pages. So this is like the financial year 24 results. But this company is operating cash flow positive. I think maybe profitable or very close to being profitable. A significant improvement from the previous year. So it looks like the management have turned things around. More than likely, a lot of this is cost cutting, but that's okay. That's the environment we live in right now. The other thing that intrigues me about EROAD is they are listed on the New Zealand Stock Exchange, ERDNZX, and the share price is up 9%. At one point in the day, it was up about 13%. We haven't seen that sort of reaction on the Australian market like we have seen on the New Zealand market. So maybe there's a bit of an arbitrage here between EROAD on the ASX versus EROAD on the New Zealand Stock Exchange, the NZX. I'd say and suggest that it's more liquidly traded over there. So the next thing I want to look at is the chart. And this is where it becomes even more intriguing, is the chart. Just like Wisr, share price of EROAD was in a well-defined downtrend. No reason to be buying shares during that period. But we have started to see share price consolidate. There was a takeover bid. Takeover bid, I think fell through. That's why share price collapsed on the 11th of September. The share price is going sideways. And I'm still waiting for a little bit of a breakout. I think a good price for a breakout would be above $1. I was hoping that would have been today, but we haven't seen much volume, which is another surprising thing. Much bit of volume in the past, but I think there is potential that if they can maintain this momentum going, this company could be attractive value at these prices. I won't go through the result or the announcement. It's 124 pages long, but I did quickly go through it, and yeah, the company is intriguing. Seems like they are also held by Australian ethical funds. Change in substantial shareholding from AEF. What have they done? Let's have a look. Oh, it's because of a maybe that's 9.1%. Yes, 9.1%. So what did they do? Movement of 1% substantial holding. They didn't increase. Oh, there we go. They sold 2.1 million, looks like. 2.1 million shares they sold. And yeah, so that's something you can read in the announcement lists of all companies. Who is selling out of the substantial shareholders, who is buying. There's another one, change in substantial shareholding for EROAD on the 8th of May. Anyway, I'm moving beyond what I wanted to talk about. I want to keep this video under 30 minutes. So that's coming in number 3 is EROAD. Definitely a company to put on a watch list, because if they continue to grow, this company could be attractive later. It wasn't that long ago. This company had a markup or a share price of $5.40. When I say not long ago, we're talking about 3 years ago, but still, the share price fell a lot. And this could be another one of those turnaround examples. Gentrack and Integrated Research are the two I'm thinking of when it comes to this space. So that's EROAD, company I've never really done a lot of research on, and in fact, very little research on, but intriguing happenings with this company. And it is illiquidly traded, by the way. So only 22 trades today, and the value of those trades, $39,000. Okay, so that's coming in number 5. We have EROAD. Coming in number 4, we have the Reject Shop. I'm intrigued to see what the share price has done. Oh, 7%. Yeah, I sort of expected this. Sort of. And they did do a market update today, a trading update today. On the surface, it actually didn't look that bad. That's my initial reaction. We had all these positive numbers. So talking about the year to date, also talking about the second half to date, and it was all positive numbers. Now, low positive numbers, but comparable store sales growth of 2.7% for the year, 4.2 sales growth for total sales growth. So that includes stores that have opened up. And otherwise, it was sort of positive. It wasn't that negative, I thought. Yeah, in fact, if you just look at some of the words they used, positive signs, growth, continuation of the positive sales momentum, sales growth, performed strongly, and the ongoing newness and differentiation in our home range has continued to resonate well with customers. So I thought maybe the market would react well to this particular trading update from the company. But no, the company's share price is down 7%. So the market didn't like it. So maybe the market had better expectations for the Reject Shop. And to be honest with you, when you look at the chart, and I would assume that Reject Shop would not be classified as a high-quality company. So if it's not a high-quality company, I'd just be trading this. And when I look at this chart, there was no way I'd be in this company right now, just based off this chart. Now, I was trading Reject Shop back here, back towards the last half of last year, But that trade went against me and I sold. And this is why you sell, because share price has dropped significantly since then. Now, possibly, if we look at the weekly chart, maybe the share price is getting to interesting levels. So the lows we saw back in June 22 were about $3, and it's just above that right now. And back in the COVID-19 financial panic, share price fell to below $2.50. Even before that, in 2019, share price was even lower. So share price still not at historic lows, but maybe you could argue that there is some valuation in this company, some good value in this company at a market cap of $145 million. And last year they had a profit. Let's have a look. Last year they had a profit of 10 million, 7.9 million the previous year, 8. Companies usually is profitable, but really low margins. I don't like the low margins in the reject shop. But even if I don't like the margins, I could take a position in this company if I see some really good value and the chart was in my favor. That's the reject shop. Coming in at number 4. Coming in number 3, we have a company that is definitely liquidly traded, AFT Pharmaceuticals. Share price up 14% today, $2.81. I'm not surprised by this. And I'd say there's not many sellers, and tomorrow the share price could be up another 15% because the first seller on this list is at $3.09, and we have buyers who want to buy at share price higher than this. And they did release their financial year results. This is based in New Zealand. They sell products all around the world. And for full disclosure purposes, I'm a shareholder of this company. I've been a shareholder of this company for a long time. And I'll tell you why I'm a shareholder of this company. So they sell products. I don't even know. I can't even tell you what. Maxi something. And it's going to take ages to... So let's have a look at the chart. It's going to take ages for Comsec to open the announcement. Again, they traded on the New Zealand Stock Exchange. So let's have a look at that. So share price is in a downtrend, but I don't care. I'm in this for the longer term. And I'll tell you why in a second. But on the ASX, the ticker is a little bit different, AFP, Australian Federal Police. And you can just see by this particular chart, the share price or the shares in this company in or on the ASX are illiquidly traded. Now let's have a look at why I actually took a position in this company. It comes back to the growth. So this is the revenue growth of the company over the past 10 years, 14.8% per year, just keeps on growing every single year. And in the past few years, the growth has amplified, has accelerated. And the company is also profitable, and the profit is increasing year on year. Some years it falls a little bit, but the profit is increasing. Company is also a dividend-paying company. Now, this is group operating profit, so it's not net profit. I think the net profit was maybe $15 million. And they're selling all around the world. Australian, New Zealand. Here's what they sell. MaxiClear, some of the stuff. That's it. Maxi Gzic, whatever that is. I have no idea. It's like a flu or something. Asia, so selling in Asia. Really nice increase in revenue in Asia. International, really great revenue growth internationally. So they're really getting this product called Maxi Gzic out there. In fact, it's available now in 73 companies, up from 61 last year. Now, I'm not trying to sell you this company, but this is the reason why I bought into this company, just because of the growth this company has experienced and the potential future growth, highly held by insider, the founder of the company. So that's another attractive thing. But I think if you buy shares in this company, you need to stomach the volatility. Shares in this company were as high as $350 not long ago. Now they're as low as $240. There was a bit of a sell-off, and now they're back up to $281. So you need to stomach the volatility. And again, I think this is just a possible longer-term play. I have no intentions of selling my shares in this company because this is a 5 to 10-year play for me. So that's AFT Pharmaceuticals. I'm not sure if I've done a video on this company, but it's in my portfolio, and I'm happy to hold it for as long as possible. That's coming in number 3. Good results from the company, by the way. Did I even tell you about the results? Yeah, actually, let's have a look at the record revenue and earnings. So nice growth. Oh, they don't have any tables. Let's go back to the presentation. Yeah, so revenue of $108 million, nice increase. They broke it down into different halves the last 2 years. So $108.2 million of revenue and profit, operating profits. It says operating profits down to 15 point. Oh, that's Australia. So, gee, what am I doing? So profit of $195 million. Revenue of 195.4 million, a nice increase from last year. Operating profit of 24.2 million. Not sure why they use operating profit, not net profit, because the company had a net profit of about 15 or 16 million. I'm trying to remember. And the company has brought down the debt 45% to 16.2 million. And they're forecasting strong growth and margin improvement with 300 million rolling revenue target now in focus, because their initial target was $200 million and they're virtually there right now. And I really like when companies have that sort of target, when they're looking forward, when they have goals and targets. So that's AFT Pharmaceuticals. But just beware, if you have like what you've heard, the company is illiquidly traded, and it's not the sort of company you can trade. You have to buy shares of this company and own it for the longer term. That's what I'm doing. So that's AFT Pharmaceuticals. Coming in number 3. Coming in number 2, we have Nufarm. Released their half-year results. Share price down 7.2%, down as low as $4.33, now $4.72. Half-year results were really weak. And even their forecast numbers, a little bit weaker for financial year 24 versus financial year 23. Expect a strong half, but the strong half or the weak first half, even if they do have a strong half, means the financial year results were going to be weaker or worse than last year. And the market just hasn't liked it. I had a look at it and I wasn't sure because I have no idea what the market expectations were for this company. For some reason I want to burp. I don't know what the market expectations were. The numbers look weak, but just because the numbers look weak doesn't mean the market won't react positively to it if the numbers beat expectations and if they had a positive outlook. And I didn't see any. Here's the outlook. So it wasn't absolutely negative, but the underlying EBITDA, I believe, was lower than last year, 350 to 390 million. The midpoint does actually, they do mention this. The midpoint implies a reduction of 16% from financial year 23. And 17% from the record underlying EBITDA in financial year 22. So potentially that's why the share price and the market has sold off on this company. So let's have a look at the chart for Nufarm. And I will never consider this company a high quality company. And you can see that by the chart here. There was a bit of a bounce today. And the share price is getting to a level where I would expect some support. What I'll do now is I'll just put a little rectangle, not a triangle, sort of right there. I probably would expect a bit of, I'll probably just lower that to there. If the share price falls into this rectangle, I would expect some support in that level, because going back to 2019, when the share price gets into that rectangle, we do see the share price rally. So this is the weekly chart, by the way, going all the way back to 2017. This is not the chart of a high quality company. And the share price is very close to that rectangle area. So wouldn't be surprised to see a bit of buying coming in like we have seen today if the share price falls, say, below $4.30. That's the key level, $4.30. The low today, $4.33. Now on to, without doubt, the announcement of the day, and that is Xero. Share price up, hopefully 10%, or 8.5. Share price has been as high as $136.47. But this is a really good result from the company. And I was taken aback when I did have a look at their results. The underlying numbers here, I was taken aback by the really good growth. So they did, in the change section, they've used the words NM, which is not meaningful. And I'd say it is meaningful when profit goes from negative 113 million to positive 174 million. They've got not meaningful. I'd say that is meaningful. I understand what they're meaning. The percentage change is like a negative, or if you go from negative to positive, it's sort of like a change. No, because it's a negative. It's a negative number because you do the change on top of the original number, which is a negative number. So that would be negative, and that's probably why they've got not meaningful. Anyway, operating revenue up 22%. Subscribers 11%. You go through all this, really good growth. Average revenue per user up 14%. EBITDA not meaningful, but again, that's meaningful. It's gone from 158 million to 497 million. Operating income from 57 million to 255 million. Profit from negative 113 million to 175 million. Free cash flow from 102 million to 342 million. It's not negative. And it's in million. Yes, it is millions. I was just checking myself there. And gross margin percentage from 87.3% to 82.2%. A really, really good year for this company. They mentioned Rule of 40 down here somewhere. So they must have mentioned Rule of 40 somewhere here. Here it is. Delivered a Rule of 40 outcome of 41%, demonstrating our ability to drive both growth and profitability. And that Rule of 40, if you do get above that 40%, that is a really good result. And that is a positive sign moving forward. So the Rule of 40 is defined as a sum of annual revenue growth percentage in constant currency and annual free cash flow margin percentage. So free cash flow as a percentage of revenue. You might see Rule of 40 mentioned a little bit when it comes to software companies. So talking about margin, what's the other one they use? Combined revenue growth rate and profit margin should exceed or equal or exceed 40%. And Xero is now above 40%. It's a nice little chart maybe. What is Rule 40? There's a nice little chart here. Yeah, anyway. So if you have never heard of Rule 40, I implore you, not implore, I would recommend researching Rule of 40 a little bit more, maybe more than I have done. I have looked at it in the past, but I don't use it as an investing trigger at all. But it's nice to know. So that's Xero. Really good results. I didn't even have a look at any sort of forecast or outlook they do have. Here it is, outlook. Nothing much there. Talking about operating expenses, but nothing to do with revenue or profit, which is understandable. They're at the end of the financial year. And let's have a look at the chart for Xero, the top announcement of the day. And the chart looks pretty good. So this is the weekly chart. And of course, we did see a bit of weakness when interest rates started falling. The management pivoted towards becoming profitable, not generating revenue growth, and they've pivoted really, really well. And let's have a look at the daily chart. Share price is right at this little resistance area. So there it is. Again, I could do a little triangle. So that's a resistance zone for Xero. No, not there. There. We'll put it there. That's a nice little resistance zone for Xero because all these shareholders bought at these prices back in March, and they probably want to get out now because share price fell after they bought. And if a share price of a company falls after you buy, that has to be a dog stock. So they're wanting to sell right now. Not massive volume coming in, but it's okay. I do think there's a possibility the share price of this company will further rally from here. So good day for Xero and its shareholders. And the cut doesn't come long after. They had a bad day when they released the results last November. Share price on that day fell 12%. So hopefully you were not a shareholder at that point in time and sold out. I was, because I bought at $90, somewhere here. I bought in here about $90. So I'm up 50% with Xero. Do we have time for charts? No, I'm not going to have any time for charts today. I'm going to cap it here. Do some other stuff I have planned to do on this day. And if you have any questions, any thoughts, leave in the comment section of this video. I will do an answer reply video soonish because I'm falling behind on that. But I am answering some of your comments. Here we go. I'd have to get rid of this. I'm starting to answer some of your comments. So someone did ask about James Hardy. Someone said I sold out of Vulcan Energy way too early. Will I ever learn? And then he's replied, you're still not letting your winners run using wide stops, trailing 12. No. Okay, I'll probably talk about that a little bit more. Anyway, so if you do have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.